In this week's episode of the Stockscores Market Minutes, I'll talk a little bit about how to trade gaps and what a gap is. I'll do my regular weekly market analysis. We will do a market scan in search of opportunity, and I'll look at the trade of the week on CPAH. All right, so how to trade gaps. First of all, what is a price gap? Well, if the stock closed at $10 yesterday, and then today it opens at $10.40, it has made a 40-cent gap, a 4% gap. Essentially, a gap occurs when the opening price is higher than the previous day's closing price. And this is caused by strong demand for the stock at the open, typically because of a rumor or some new information, that sort of thing. And it motivates buyers to pay significantly more for the stock than they were willing to pay on the previous day's trading. Now, what's important is to understand that that strong demand often carries with it some emotion, and that emotion can cause people to pay too much. And therefore, with price gaps, there is a risk that the stock will pull back and fill the gap. Now, it doesn't always happen. And so there's some things to think about in terms of trading gaps, especially if you're day trading, to understand the best time to buy. Now, since shareholders may want to sell into that price jump, we want to be wary of that potential for a pullback. Now, rather than chase upward gaps, what I like to do is wait for a second show of strength, and that would be a break higher after a pullback. So it makes a lot more sense when we look at a chart. Here's a stock that I traded last week. You can see the price gap occurred. This is the previous day's trading right here, and it opened the next day up here. So there was that fairly significant price gap. This was actually a very large gap, $4.50 to $6.50, so almost a $2 price gap. Now, the action candle, which is my day trade signal, was right here. However, I didn't want to buy that because I knew that because of that price gap, all of the people that have owned this stock at lower prices are really motivated to take that really good jump in price and take some profit. And as you can see, the stock did pull back for quite some time, over an hour in fact, and then it started to grind its way higher. So what I do in this situation is I put a buy stop at the action candle close. I want to see that stock pull back and then start to move higher again. And so my buy point was actually right there, almost 2.5 hours later than the original entry signal. And then you can see that the stock went for a nice gain and ended up being quite a profitable trade. All right, so let's now get into this week's market analysis. Starting us off with the US markets, as we always do, the S&P 500 in a nice upward trend on the short-term chart. This is a 30-day, 60-minute chart. You can see that we're just trending higher. Now, late in the day on Friday, we had some profit taking. The market started strong at the open and then pulled back through the day. And that's a bit worrisome because it breaks this little upward trend line. However, in the big picture, this longer term upward trend line, which I might draw something like that, is still intact. And so we've got a little bit of short-term profit taking, worthy of some concern for the very short term, but until we break that upward trend line, I wouldn't get too worried. So I just go into Monday with a little bit of caution, but not exceptionally bearish in any way. Looking at the longer term chart, you can see that the long-term chart remains in this very strong and steep upward trend. The fact that it is quite steep means that investors are getting a little emotional, perhaps buying for the fear of missing out rather than because the fundamentals warrant these higher prices. And I'm not saying that they don't, but my point is the market's a little overextended to the upside. You can see the distance from the closing price on Friday to where this moving average is quite large, and that's an indication that the market is overbought. You can see back here we had a similar overbought situation and the market ultimately pulled back. There's no sign of a pullback yet, and so I don't want to be, an alarmist, but it is something to keep an eye on. Looking at the Russell 2000, it continues to sort of underperform the larger cap stocks. We are in that little bit of a pullback for the last couple of weeks, but still we haven't reached longer term resistance. And so I do believe that there is upside potential for the Russell 2000 and essentially the small cap stocks, but they're just still underperforming those larger cap names. On to the Canadian markets, the Toronto Stock Exchange 30-day 60-minute chart is what we have here. We had an upward move, this little flag pattern. Typically, you will get a break up from that flag pattern. We'll have to watch for that. If it happens, then I think the market moves higher. But in the short term, we're probably going to see a little bit of a sideways market, perhaps even a drift lower. Longer term chart, what's encouraging is that we've broken and closed at new highs. And so although that short-term chart says maybe we're going to stall for a few days, the longer-term chart is in an upward trend. We've got rising bottoms on the chart, and that means I'm generally bullish on the Toronto Stock Exchange. TSX Venture has had a little bit of a bounce back after really being a deplorable market. It is now coming into this resistance zone and getting stuck. That's expected. I think it's going to take a little bit more time for this market to turn around. However, it is at least starting to turn around. And so if you like to play these sort of micro-cap stocks in Canada, I think there's an improved potential, but there's still work to be done. On to currencies. The US dollar, of course, had that breakdown a couple of weeks ago from a falling top. It's stabilizing a little bit. It is somewhat oversold. Perhaps it can bounce higher, but I'm still sort of bearish on the US dollar given the price action that we've seen. Until we can break this pullback line, I would be generally cautious with the US dollar. On to the Canadian dollar, you can see we're slowly building optimism. We can say that's optimism because there's rising bottoms. That's a sign that the buyers are in control. We are fighting with some resistance. We sort of broke out, we've pulled back, but I think the Canadian dollar slowly grinds its way higher, particularly if the US dollar continues to be soft. But I don't see a real strong signal that investors are excited to buy the Canadian dollar. On to interest rates, and of course, as this chart goes up, interest rates go down, and you can see that over the last few months, it's generally been going down, which means interest rates have been going up, but not sharply so. It's essentially a market that went up very quickly, got a little overbought. Again, look at the distance between this and that moving average. It's quite far. We're now working our way back to that moving average, working our way back to the upward trend line. And so I think interest rates appear to be stable. And I wouldn't be surprised, actually, if we start to see the bond market move up a little bit in the next few weeks, which would be interest rates moving down a little bit in the next few weeks. On to commodities. And of course, gold took a little rally on political concerns surrounding Iran and the US. That gold market closed below its open on Friday, and that indicates we probably pull back, kind of like what happened here. You know, we had this little run, we pull back perhaps for a little while. The upward trend is still in place. However, I think market a little bit overbought, probably due for a pullback. We'll see if that happens. It's going to depend a lot on headlines out of the Middle East. The USO, which is the oil fund, basically is a proxy for oil. That's what I like to use. You can see that with the tensions falling in the Middle East, we had a pretty strong move to the downside for oil. But perhaps no coincidence that it essentially hit this resistance zone and got stuck. I still think that oil is starting to stabilize, starting to turn around. We have talked in recent weeks about this downward trend line getting broken, and we're now building an upward trend line. I just don't think it's really a time to be excited about oil yet. It's just a time to be less bearish and perhaps a little bit optimistic that there is a future for oil. On to the fear chart. And one thing I want to emphasize with this chart is that the VXX, which is based on futures, essentially decays in value over time because there is time value in futures contracts and that decays in value over time. So when you see this at an all-time low, that's really no different from a volatility perspective than it was back here. The fact is it's at a low, and that means fear is low, but this is not less fearful than this because of that time value decay. If you want to know more about that, I recommend doing a Google search for time value decay of ETFs or of the VXX, that sort of thing. There's people that have done videos that will actually go through the math of how that works. All right, so my ratings then, bullish on both time frames for US and Canadian stocks. Gold, bullish long-term, neutral short-term. I do think a pullback is likely. Oil, neutral long-term, and bearish short-term because of that selling pressure we had at the end of the week. Stocks continue to defy gravity, but it feels like there may be some profit taking coming in the short term while the long-term trend remains up. Gold is due for a pullback and oil has stalled at resistance. Now, there's lots of trading opportunities in the market, but it's important to not chase stocks higher. You want to find those stocks that are breaking from low volatility, that are starting their upward trends, rather than chase after those that are well into their upward trends. And of course, as I said, fear is low. All right, so let's do a Stockscores market scan now. Again, the Stockscores market scan tool is a very powerful tool for searching the market. It looks at all Canadian and US markets, and you can, with the click of a button, scan through the entire market in search of stocks that meet any of the criteria that are included in the market scan tool. And there's a couple of dozen at least, perhaps even more. And so what I like to do is use some of the preset scans. This week, we're going to use the abnormal break scan on the US market. Now, this scan looks for stocks making abnormal moves to the upside with a few other filters, and then we can evaluate their charts to see if they have good chart patterns. So to do that, I'm going to jump over to the market scan tool. I'm going to select the abnormal breaks US scan. Now, of course, these scans are only available to investor members of Stockscores. You can go to the Stockscores website under the Trader Training menu. You can find out how to be a member. What I'm going to do now is run the scan. It found 37 stocks, and I want to now look at the charts of these stocks to see if they have good patterns. Now, what I'm looking for are strong price breaks from low volatility, stocks that are surprising the market. So you can see there that that surprises the market with abnormal price, abnormal volume, out of essentially a pretty quiet sideways trading range. Now, I'm a bit concerned about this resistance here, which may slow the market down for this stock. I like the abnormal activity. It shows me that investors are excited. I want to take a look at the 3-year weekly chart of this stock as well, just to see where the potential is. And again, I'm a little concerned that this stock is going to be fighting with resistance. So I would give this a rating of 6 out of 10. It's got potential, but it's got some resistance to work through. And that's essentially what I'm looking for when I go through these charts. Here's another one where you've got this abnormal volume and abnormal price action, and really a stock that was pretty dead and boring. It's going to run into some resistance in this price range, the $2 to $2.50 range, which is enough upside to justify the trade. I would give this one a 6.5 out of 10, which means in my mind it has a 65% chance of moving higher. Now, as I go through these charts, I'm just going to stop on the ones that I think have good potential. This stock obviously suffered a very large gap to the downside, obviously some very negative news that hit the stock, but it's now starting to get some buyer interest again. We've got a little bit of positive price action, some abnormal volume coming in. There's a lot of pessimism to work through on this stock. I would give this particular chart a 6 out of 10. Continue to look through these, and I'll stop at anything that I think is particularly notable. ACRS was a good trader on Friday. It closed below its open. That's why that candle there is a little bit red. You can see the very strong volume, traded with good liquidity, trading 15,702 times. That's pretty active. Had a 17% price jump. Despite the size of that price jump, it's still got a long way to go until it hits resistance. So if this stock had closed above its open, I would have given it a 7 out of 10. I'm a little disappointed that it closed below its open, so I'm going to knock it down to a 6.5 out of 10. And that's the process that I use every day. I just run the market scan. I go through the charts looking for the patterns that I like to see. I can teach you what those patterns are. That's something that's done in the trader training that we do at Stockscores. And again, you can look at the website for that. Let's take a look at this PWFL. The daily chart has got some potential, but I'm a little bit worried about risk. So I'm going to take a look at the 3-year chart, and I see a big problem, and that is the stock is hitting this resistance area from the highs of 2019. And so I think the upside is just not significant enough, so I wouldn't take that trade at all. All right, so that's the process. I just cycle through charts looking for good patterns. Let's move along now to the day trade of the week. And again, these are trades that we found with the active live service on Stockscores that I run each and every day. These aren't trades you can do anymore. I just want to sort of give you some education and highlight the sort of opportunities that we trade in active live. So this particular trade came up on Friday, CPAH. It's a stock that we picked up at $9.34. And the economics of the trade are, as you see on the left. For every $100 of risk that you wanted to take, required 660 shares to be purchased. That represented a $990 position. Because the stock is less than $3, you probably can't margin it, and so we have a not applicable for margin. Still, this trade worked fantastic, earning a 15.9 reward per risk ratio, which means for every $100 of risk, it gained $1,593, which is a phenomenal 160% return for a one-day hold. We don't get many like this, but this one came up on Friday. We actually had a couple on Friday with these kind of numbers, and that's always lovely to see. All right, well, that has been the Stockscores Market Minutes for January 13th, 2020. For more information on what we do at Stockscores, just go check out the website. There's lots of information on there. If you enjoyed this video, please click on the like button, subscribe to the channel, hit the little alarm icon so that you will get instant updates when I upload a new video. But most importantly, trade well.